All right, welcome back. Let's do a quick analysis of the Bitcoin price. We're beginning with the monthly chart, so we've just begun a new month a few days ago. Sunday, September 1st. Today is September 3rd, Tuesday the 3rd. And we are still in the premium half of this dealing range here. We're above equilibrium, which would be about here. We've had lower highs for the most part over, since hitting our high back, the all-time high back in March of 2024 this year. But our lows are low too, but we have mostly wicks down here. We haven't really closed that lower. Although in August we did close below all of these other previous months. So what is that telling us, if anything? Well, let's go down to the lower time frames where we can see more clearly what's going on. So this is the weekly chart, which I've been talking about since I started these a long time ago, and pointed out that since November of 2022, this candle here, we have not, this is the last time we had a market structure shift below swing lows, right? Below swing lows. Whereas then we continue here and we have not had a bearish market structure shift until we get all the way to the 1st of July, the week that starts 1st of July, 2024. So that's a good year and a half, maybe more. And that was when we wicked below this swing low, and we even closed below it. And I did hear Michael or ICT again talk about how to be a market structure, if you do not have to close below the swing low, which is still something I don't fully grasp, but I've definitely heard him say it more than once. So I'm going to continue to study that to better understand it. I will mention that I am just a student. So this is me studying, sharing my thoughts. Of course, you decide to do whatever makes sense to you. So what we see here is this was a monthly bullish inversion over here. We had that on the monthly chart. We'll go back to that, right? We see that over there, monthly bullish inversion. And we came down into it, but we didn't close even inside, so we respected it. Also, since we had this bearish market structure shift, we haven't come back down and closed below it. We've wicked below it, but we have not closed below here, not yet. We did come back up, but we haven't gone above this whole leg coming down. We did slightly wick above it over here, but then we came all the way down and lower down, and then last week we closed below the open of the previous week. So I think that would qualify as a bearish change in the state of delivery, at least compared to the previous week. And then the question is, what next? Let's keep going down to, I'm going to go to the 3-day chart, because I think this is, well, looking at it, it looks to me like a nice time frame here. It just seems to have enough detail, but not so much noise. So what we see here is we have this SIBI, this bearish for value gap up over here, that we've really respected 4 times, right? 1, 2, 3, 4. You can even say 5 times. That's on the 4-hour, by the way. That's why it looks this way. So it's a 4-hour SIBI that we've respected very nicely. Here we had another SIBI over here, which we respected several times. Okay, that is a daily SIBI. Then we created this SIBI, which we've respected as well. It doesn't look like we've closed above equilibrium. If we did, it was barely so. So we seem to be respecting this SIBI, and what we have is these lower nested SIBIs are being respected. This one is, of course, the 3-day, and these are overlays from lower time frames. We've come down. This was that market structure shift. Now we had another market structure shift over here. Came back up. You can say we had a bullish market structure shift, but it didn't hold. or it didn't hold. So while we had a close above the equilibrium or the consequent encroachment rather of this SIBI, we then came down and closed below it. We have this was a BISI, then it inverted, and we've respected the BISI. We see we came back up, closed down. We closed above it on the 3-day, but also, I mean, we just went up and down. So I assume that's pretty, that's not a bullish sign. That's for sure. We also have, that's on the daily. Let's make sure we don't see this on the 3-day. Let's make that just the daily, the 1 day. All right, so on the 3-day inversion we have here, we inverted bearishly. I kind of respected it, and then we came up yesterday, right up to the bottom of that. If we say the high of this candle was 59,853, the high of this that forms the bottom of the 3-day bearish inversion for value gap. So again, that was 59,853, and the high of this candle is 59,803. So it's a difference of $50, which on a $60,000 item is really insignificant. That's very, very small. Let's go down to the daily now. Okay. Now on the daily, what we've done here is I put this up. I know I haven't posted on this chat here for a while, but I did do some things for a small group of just a few individuals, few friends, and what we see here, and that's what this purple line here. This purple line is showing that if we close below this support line, what makes it a support line? It's the open of this leg here. It's the open. What happens on the 3-day? Yeah, so it's the opening price of this, the most recent bullish push upwards over here, and we closed below it. We closed below it on Sunday. Okay, so we closed below that on Sunday, which I think is a bearish change in the state of delivery on the daily. And then we moved back up and came a little bit higher, which again brought us up to, one of these brought us up to the 3-day, just wick up and respected this 3-day bearish inversion. The high there again was 59,803. 59, right? So we came just short of it. And in the last hours, we've been coming back down to this line here. What I'd said a few days, I guess 2 days ago, after we came below here, that it was likely we were going to move back up. I'm on the 4-hour now. And I said, I don't know how high we're going to go. We're probably going to go high back up into this SIBI that was over here, which we did. And then I said, it's very likely we'll go into the SIBI above, and we might even go into the SIBI above that on the daily, which would be up over here. But it doesn't look like we're going to be going there, at least not yet. It's probably more likely that we're going to go lower before we go back up to the 65s. It'll probably get down to 50,000 before we go up to 65. That would be that's my call. Obviously nothing's for sure, but it just seems more likely. We've had so much chopping around here going sideways in this range here of, let's say, from 56 to 70 approximately, right? So 56, we had so much going on here. We've come back up into some imbalances, and then we've continued coming lower. It seems that the next stage to me is that we're going to go rebalance some of these imbalances, or that we have below, say below 56,000 or so. I think that's very likely. Let's look at the 4-hour. Look at the 4-hour. The next, if we are bearish, this is what we want to see happen over the 4-hour. We want to see that we close. See how this candle here, the wick, respected consequent encroachment perfectly? So the next thing we want to see is we want to see price close below that wick for some strong bearishness, and that low would be is 56,138. So we want to see a close below 56,138, which is about $1,500 lower than the current price at this moment of recording. Following that, we'd want to see a close below, a 4-hour close below this BISI, this 4-hour BISI here, which really should be there. And of course, after that, we want to see a close, a 4-hour close below this swing low over here, this 4-hour swing low. And if we see that, and we'll probably have some, if we create SIBIs moving down, we'll probably have some retracement. But overall, we are in bearish price delivery quite clearly since the 25th of August. That's on the 4-hour. And if we look at the daily, it's even longer. We have not had a close above a bearish leg, since here. And that didn't hold. That's all for today. Hope you found this helpful. Let me know what you think in the comments. And